James, very good to have you here today to talk about the Fair and Effective Markets Review.
Well, it's good, and it's obviously something that's very pertinent at the moment, so happy to talk about it.
So really the first question is, more than a year after the review was put in place and some months after the results came through, where are we now?
A lot of work went into the report and the final recommendations. One of those recommendations was the establishment of a new body, and it's the FIC Market Standards Board, or the FMSB as it's now known, and that actually is something that will now take this forward, and so that's something that's very exciting. It is UK focused, but that clearly will have some elements of international impact as well.
So describe the shape and responsibilities of the new board.
Well, there are two parts really. If you think there's the official sector, so clearly there's a need to report back in a year's time, as was outlined in the report, against the various different recommendations. And then you have, if you like, the private sector or industry-led FIC Market Standards Board, the FMSB. And that is a body which will be made up of cross-industry participants, so buy-side, sell-side, infrastructure, potentially the non-bank liquidity providers. So everybody in the financial wholesale markets in the UK. So that is the makeup of the board, and there's likely to be a broader membership as well that will create an advisory committee that sits around that as well. So the beginnings of that are taking shape.
And what are its responsibilities?
It has three main areas that it is looking at, particularly the FIC Market Standards Board. Obviously that's within the broader context of the regulatory world, but the FIC Market Standards Board has three main pillars, one of which is the market practices. That is split into, as you'd expect, the FIC participants, so fixed income, currencies and commodities, as it was under the original FEMR work. There are then two other pillars, one of which is convergence, because clearly one of the things we do see is read across between different asset classes and on an international basis, so there is a convergence pillar. And then the third pillar is the ethics and conduct area, which is looking at education and how do you achieve a level of adherence to these new codes. Clearly one of the criticisms of codes is that they don't have teeth, so how do you make that less of an issue? How do you bring this to the market?
Do we have answers on that point as yet?
Where we are, we certainly have the beginnings of the structure of this overall FIC Market Standards Board. It has got its board membership up and running. There are leads for each of these areas, and that will be taking shape. I think the other thing to be aware of is, of course, this body sits within the broader regulatory world, and there is a keen amount of interest in how there will be adherence to this. And you will see coming out of the FEMR work, for example, ways to create greater adherence. So you saw the extension of the senior managers regime in the UK to non-dealers, as it were, so broadening the number of people who are captured by the senior managers regime legislation. You also had talk within the FX world of bringing out a market abuse type regime for FX to counter any criticism that was outside the regulatory perimeter. So I think we will see measures to deal with that. And of course, you're probably more aware as well of one of the recommendations, which was to deliver a global FX code.
Well, that was going to be my next point. These are very international markets now. How is this going to be finessed into the international system?
The main co-chairs of the whole Fair and Effective Markets work, so the Treasury, FCA, Bank of England, did go through a huge amount of outreach to, if you like, build into the process the requirement that any market participant in London is likely to have an international footprint. So clearly there's going to be an impact of sort on the international arena, even if this stayed just as a UK initiative. So you need to get some buy-in to that. So that's on the policy side. One of the recommendations that on the group that I led from the FX side was that we started to move towards a global FX code. There are probably half a dozen regional FX codes, and we wanted to move towards a global code for clarity. That recommendation was taken up, and what is very exciting is that under the BIS and Guy Debelle's leadership that was announced recently of that, we will see the development of a global code for FX. And I think for a very global asset class, that makes absolute sense. Clearly, it must cover all market participants, and that's one of the other recommendations we made under FEMR. But already that is up and running. And so that will give an international flavour to it. 15 or so central banks are involved. Obviously the regulators in those countries will need to take part as well, but that is already up and running. On the broader fixed income markets, for example, perhaps that is something we'll need to look at going forward under the new FIC Market Standards Board, how are you going to achieve, or do you want to achieve, international convergence across these conducts areas?
Thank you, James. I mean, in your capacity, you were very closely involved in the proof of concept work for FX stop loss regime, if I've got that correct. Can you draw some conclusions from that?
I think what we found was that there was a real appetite to bring clarity. One of the things, the criticisms you hear historically is the lack of clarity around guidance, and the need to get to a far better level of clarity. We achieved that through this stop loss work, but there was a proof of concept of two things. One was process and one was content. Process was, how do you get industry and our regulators and supervisors together to create this going forward, this very collaborative way of working. I think we really demonstrated how that could succeed, and everyone was very bought into that process, which I think was a really good dynamic. The second was on the content and bringing together different industry experts to create this code, not just to document what happens at the moment, but actually look in a personal capacity and say, what are the risks that are out there? How would we look at the industry and try and close that down? That has been instrumental in changing some of the thinking in the industry already. That work will be provided not just into the global FX code, but also now into the other asset classes through the FIC Market Standards Board, as if you like a template of how to do things, but also the type of content and clarity that you want to bring forward. So I'm excited about that. I think we have a route forward. I think the industry is behind it. The regulators and supervisors are clearly behind it and would like to see the industry take it forward. So I think the next 12 months will be an exciting time for the industry in terms of tackling the conduct issues, in terms of bringing a fairer and effective market to the UK in the first instance, and ensuring that going forwards we scan the horizon for this type of risks we might see in new trading patterns, etc., and ensuring that we do have proper conduct, fair and effective markets for the future.
James, thank you very much.
Thank you.